What if you could cut through the noise of daily financial news and get straight to the insights you really need?
That's the goal here. We have experts like Danielle DiMartino Booth of QI Research, Trade Brigade, and more breaking it down for you.
Join us as we sift through their analyses, saving you hours with AI-powered summaries that give you the facts without all the fluff.
Let's dive in. Danielle starts with crucial predictions for the consumer market in 2025.
And stay tuned as the Trade Brigade examines how tariffs are reshaping today's investing landscape. Welcome to the 2025 Annual Roundtable with Danielle DiMartino Booth.
Today we'll reflect on lessons learned from 2024 and project into 2025.
Danielle points out that government spending is projected to rise significantly this year.
She's concerned about the ongoing high deficit, which is now equivalent to 6% of GDP.
Danielle describes a shift in consumer psychology, leading to unexpected spending levels.
Analysts were caught off guard by this drastic change in consumer behavior.
Danielle believes the Federal Reserve will cut interest rates more than the market currently expects.
She suggests these cuts are necessary to address signs of economic weakness.
What are Danielle's key predictions for the consumer market in 2025?
She predicts struggles for consumer staples due to reduced pricing power and recommends a short position.
Danielle concludes that investors should focus on risk management strategies right now.
She emphasizes the importance of active management in fixed income to navigate coming uncertainties.
Good morning, everyone. Today we're reviewing how Trump's tariffs are causing significant market turmoil.
The team highlights that this situation resembles the gap down we saw last week, where the market also faced sharp declines.
The Trade Brigade team notes that today's market response shows significant fear around tariffs, causing a notable gap down.
Analysis suggests last week's trading patterns might not apply this time because of increased overhead supply. The team emphasizes that traders should not assume today's market will behave like last week's, advising caution.
Understanding the current market dynamics is crucial for successful trading. The Trade Brigade team states that identifying key levels to watch today is essential for managing trades.
They stress the necessity of having a clear risk management strategy given today's volatile conditions.
The Trade Brigade team predicts ongoing market fluctuations as traders react to tariff news.
They note that market recovery is contingent on possible outcomes of upcoming tariff negotiations.
In conclusion, today's market environment requires traders to stay informed and adaptable.
The Trade Brigade team highlights the need to remain alert to key economic indicators and news.
Today, we're diving into the initiatives by Helen Kerwin, Texas House Representative, aimed at addressing property taxes.
Helen's advocacy sheds light on the challenges homeowners face and underscores the opportunity for impactful change.
Helen Kerwin highlights the plight of seniors being pushed out of their homes due to high property taxes.
Travis notes how grassroots campaigns can exert substantial pressure on lawmakers.
Helen provides examples of constituents losing their homes due to rising property taxes.
Travis discusses the importance of sharing these personal stories to advocate for reform.
Helen explains various legislative paths being considered, including a VA tax.
Travis reiterates the need for ongoing dialogues with local officials to stimulate change.
Helen urges constituents to make their voices heard regularly to their legislators.
Travis provides viewers with resources, including templates for advocacy letters, to assist in the effort.
Helen shares her optimism regarding the current political landscape favoring tax reform.
Travis agrees, highlighting the potential for a national ripple effect on property tax policies.
Helen concludes that it's vital for community voices to unite in addressing property tax issues.
Travis emphasizes that the success of these initiatives hinges on ongoing engagement from constituents.
Today, we delve into the ongoing economic ramifications of the banking crisis initiated by Silicon Valley Bank's collapse, as analyzed by the presenter from Eurodollar University.
The presenter emphasizes that while immediate banking threats have been contained, the real economy faces significant long-term challenges.
The presenter claims that while the Federal Reserve appears to have contained the immediate banking contagion, the broader economic recovery is still uncertain.
This is evidenced by ongoing challenges in GDP growth and employment trends.
The presenter illustrates that post-crisis GDP growth remains stagnant.
They further note that labor markets have shown little improvement, signaling that deeper issues persist.
According to the presenter, the market's reaction to ongoing interest rate hikes demonstrates skepticism about their effectiveness.
Investors seem to be recalibrating their strategies amid these economic challenges.
The presenter discusses how banks have shifted towards conservative lending practices in light of recent events.
This risk aversion adversely affects the real economy, making access to credit more difficult.
Looking ahead, the presenter predicts that economic challenges will likely continue.
They stress the importance of policymakers tackling these foundational issues to achieve stability.
To effectively navigate the post-crisis landscape, the presenter concludes that strategic policymaking is essential.
Additionally, stakeholders across sectors should proactively engage in measures to address ongoing risks.
Welcome to the Technical Traders. David Lin focuses on the latest market update, highlighting shifts triggered by tariff conflicts and their economic implications.
David notes that the U.S. tariffs have notably influenced the Canadian dollar, with a significant devaluation against the U.S. dollar.
David explains that the U.S. tariffs are predicted to lead to a further decline in the Canadian dollar, projecting an exchange rate around 1.63 or even 1.74.
This aligns with David's prior analysis, which predicted bearish trends for the Canadian dollar amid increasing trade tensions.
What does David predict about current trends in the NASDAQ and S&P 500?
David indicates that the NASDAQ is down approximately 1.75%, while the S&P 500 has declined by about 1.6%, suggesting a panic-selling environment.
David asserts that during market volatility, investors are gravitating towards gold and Bitcoin for safety.
He notes a correlation between Bitcoin and NASDAQ performance, indicating both are influenced by market sentiment.
What are David's predictions for the future market direction?
David anticipates a major market peak approaching, but recommends maintaining a bullish outlook until a trend reversal is evident.
In closing, David advises traders to monitor price actions closely and adapt their strategies based on economic developments.
He emphasizes the importance of remaining flexible and reactive to market changes rather than assuming different outcomes.
In today's video, we're analyzing insights from Sven Henrich of Northman Trader about current stock valuation levels and their implications.
Sven emphasizes that stock levels are at unprecedented extremes and discusses the sustainability of such valuations.
Sven points out that while Germany experiences negative GDP growth, its DAX index is reaching all-time highs, illustrating a disparity between economic health and asset prices.
He suggests that the current market is fueled by three main liquidity sources: massive deficits, corporate buybacks, and reverse repos. Sven notes extreme market valuations suggest a trading year rather than an investing year, indicating potential volatility.
He emphasizes monitoring liquidity sources as pivotal for sustaining current high valuations. Sven expresses concern over the current bullish sentiment, contrasting sharply with extreme valuations.
Many investors seem to buy into market dips without fully assessing the associated risks. Sven forecasts that although market corrections are possible, liquidity will continue to support asset prices.
Traders need to focus on technical setups while remaining adaptable to potential market shifts. Sven warns traders to anticipate significant volatility this year due to inflated valuations.
He believes that central bank responses to any downturn will heavily influence market recovery patterns.
Ultimately, investors should prioritize risk management, especially given the signs of potential corrections discussed by Sven.
Being aware of liquidity dynamics and valuation levels is crucial for navigating 2025 successfully.
What an amazing discussion we just had. Each expert brought unique perspectives that really opened our eyes.
Indeed, Sven Henrich gave us a look at the extreme valuations out there, suggesting we stay cautiously bullish, while David Lin connected tariffs to market performance.
It's true. And how about the Eurodollar University presenter? They raised alarm bells regarding the deeper systemic issues from the banking crisis, didn't they?
Absolutely. It really highlights the complexity we're dealing with. And let's not forget Helen Kerwin's insights on property taxes.
Right? She pointed out the burdens facing homeowners, which is a crucial point in today's economic climate.
But then there's the trade analysis team cautioning traders about quick market shifts. We're in a volatile environment for sure.
And Danielle DiMartino Booth wrapped things up nicely by discussing how fiscal policies will shape the future. It really makes you think.
If you found these insights valuable, make sure to like this video and subscribe to our channel.
Exactly. Your support is vital to help us bring you more in-depth analyses from financial experts.
And don't miss the next episode where we'll explore the evolving global trade dynamics. Trust us, you won't want to miss it.